rAVE's boom and bust is now being read as a manipulation story because the collapse followed an explosive, low-float run-up. This matters because the article connects the crash to specific wallet behavior and exchange transfers, not only to a volatile chart. Once that happens, the token is judged as a market structure problem, not just a bad trade. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. The article said rAVE ran from about 25 cents to $27.33 in 9 days, and then collapsed about 90% to near 67 cents, wiping out roughly $5.7 billion in market value. It cited ZachXBT's claim that about $23 million in rAVE was moved from wallets linked to the project toward Bitget before another sharp drop. For searches like rAVE token loses, this matters because the article connects the crash to specific wallet behavior and exchange transfers, not only to a volatile chart. Once that happens, the token is judged as a market structure problem, not just a bad trade. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. The same piece said concentrated supply made such an extreme move hard to read as organic. Low circulation and concentrated holdings can let a token reprice violently because relatively little real float needs to trade to move the headline market cap. That makes exchange inflows especially important to watch. A low-float market can move violently because a small amount of tradable supply can swing the headline market cap. That mechanism is the part traders can miss when they only look at the chart. That affects current holders, but it also affects confidence in centralized listing standards and how quickly markets respond to obvious low-float distortions. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. The unresolved issues are responsibility and proof. Allegations and on-chain patterns can point to manipulation risk, but final attribution still needs stronger evidence than a single suspicious flow. rAVE token loses is the phrase tied to this setup, and the unresolved issues are responsibility and proof. Allegations and on-chain patterns can point to manipulation risk, but final attribution still needs stronger evidence than a single suspicious flow. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch for clearer exchange explanations, further on-chain tracing, and any stronger disclosure of who controlled the supply during the run-up and collapse. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move and why follow-through is the real test. Watch for clearer exchange explanations, further on-chain tracing, and any stronger disclosure of who controlled the supply during the run-up and collapse. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.